even people with high incomes are living paycheck to paycheck because they're not checking their habits and their mindset.
Just because you have some debt doesn't mean that that's the thing you should be attacking. Maybe you should be attacking your cash flow.
Generational wealth is about like the mindset that gets changed in each generation.
We need to go back to the drawing board to teach people how to earn money.
No matter how much money you're earning, it's all gonna fly down the drain because you've really never mastered how to create habits.
If you don't have new conversations, you'll never open up doors to opportunities that are out there for you to make new money.
Just leave it.
It doesn't matter. What's up, y'all? Good morning.
Good morning. Don't rush, baby.
She's trying to make eggs. She's trying to make eggs before Money Mondays with the Mouzons.
Why do you keep wanting to call morning?
I don't know, because I do morning mindset often also. So they both start with M in the alliteration. Anyway, what's up, everybody? Hope everybody's doing well. Happy Monday. We're back. 15 minutes late, but we're back. We're back. We're supposed to be
precise 14.
14, sure, but we're still not really started because y'all are still over there, right? So we try to be on time.
Okay. Ready.
All right.
Why are you guys so
Say it.
tall?
Say it.
Happy.
Money
Mondays.
with the Mouzons.
Why are you so tall?
All right.
I'm really this
Our
short.
stool is tall.
That's right. So yeah, glad to be back with you. Hope your weekend went well. Hope you enjoyed the Super Bowl or whatever you did yesterday or throughout the weekend. It's good weekend for you guys. Good weekend.
It didn't feel like a weekend. It went by so quickly.
Well, our days are all the same.
I know.
Right? Like it's not really weekend
Right.
weekdays for us, right? It's all
Right.
kind of the same. So,
Mm-hmm.
but for you guys, hope everything went well. Hope you had a great weekend. We're back again. The reason why we do this, y'all, we always explain it. The reason why we do this is so you guys have the ability to have a resource financially. If you have a question, comment, concern financially, something that has been top of mind for you, you haven't been talking to a financial professional, you've only been talking to your friends, your family, your coworkers, you've been reading information on the internet and all that type of stuff. If that's been you, then we're giving you an opportunity to say, hey, we'll give you more, right? We'll make sure that you can get your questions answered and we can be a resource for you. So that's why we do this. Again, you guys know the thesis here is to really get your financial questions answered and build your financial foundation. We believe no matter how rich you are, how poor you are, it doesn't matter. People deserve to have financial education,
Right.
right? People to talk about the financial things. And so that's
and
what
the
we
more
bring.
financial education you go and seek out, the more successful in your finances you'll be.
That's right.
It's, they go together. If you want to be more successful in your finances, you got to go seek out more education. You can't wait for it to just come. Got to go seek it out.
The more we know,
Yes.
and then the more we apply that knowledge.
Yes.
Right? The more we know, and then the more we apply that knowledge, the better we can be.
Mm-hmm.
So we want to help you, right? If there's some things financially you got some questions on, feel free to drop some questions in the chat. We're going to touch on, it's tax season, right? It's tax season, so we're going to touch on that tax conversation. What's the thing we
But
tell
more
people?
specifically,
More specifically what?
like
what
how
did you...
our taxes affect our savings and our retirement, because it's a huge chunk.
Yeah. What do you want to talk? Do you have a starting point for the retirement or the savings? You just want to start at tax buckets? Where do you want to start?
Yeah, maybe tax buckets, but I think we could start with tax buckets, and we could just start talk about the ideals people have that sometimes serve them and sometimes don't. Around taxes, I'd rather get taxed now, than later. Or I'd rather put my money in tax deferred so I can bring my tax rate down now at the end of every tax year and pay less than, I'll get to retirement whenever that day comes. We'll deal with it then. Because people are very focused on the satisfaction of reducing their taxation now. And they're putting it on the back burner how much taxation will happen in retirement when they actually will need the money a lot more than they think they need it now.
So, true. Yeah. So, recommendation. So, let's start
And
with...
a lot of that is conditioning. It's like people have been conditioned. I think that ideal affects people a lot more when they're in a much higher tax bracket and they're making a lot more money. Then we kind of figure out options to save on taxation now, which usually isn't like put it all in retirement later. And it usually is there a lot other options where you don't have to throw it all on retirement later.
Yeah. So probably good to educate and start with like tax buckets. So first off, taxes are your largest lifetime expense. I hope you know that. If you didn't know that, right, like it's probably, again, the financial education part of things. It's something we don't think about often, but it is the truth, right? Like taxes are our largest lifetime expense. It's our largest lifetime expenditure. The thing across the course of your life that you'll spend the most money on is going to be taxes. Why? You get taxed when you make money. You get taxed when you spend money. You get taxed when you try to save and invest money. So no matter what you do with your money, Uncle Sam's got to get his part of it, right? This is why the number one thing wealthy people think about and plan for is like, how do I shield my money from taxes, right? How do I avoid taxes? Not evade taxes. That's illegal. Evading taxes is illegal. But avoiding taxes is a part of learning the tax game and learning how to win the money game, right? That's a part of it. And so understanding all the different ways, right? All the different ways to pay attention to taxation. First and foremost, how the money comes in, right? We get taxed when we make money. So most people are on a W-2, right? You're at a job, you're on a W-2. Most people, other people might be on a 1099 or something along those lines. But the difference in how the money comes in, or how the money comes in, determines how you get taxed. Munchkin, what is she trying to bargain?
She's trying to watch something while she eats.
No, sit down. No, go.
You can
Munchkin,
a
just go.
Bookie.
She only does this in the midst of when like we're like talking and stuff. Samina, just go sit down and eat your breakfast. Yeah.
And you can have a book next to you, baby.
Yeah. Anyways, so again, taxes, how it comes in. Tax laws are written for business owners and investors. So at the end of the day, when you are on a W-2, the government gets their money before you get your money. Long term, it's tough to build wealth that way, right? I don't know anyone that builds wealth that way, in all honesty, right? So you got to know that that's the way it works, but that's why you're going to get a tax refund, because you've overpaid in taxes, right? I always want to explain what a tax refund is. We used to get very excited about tax refunds depending on where you come from or where you grow up or how you live, right? People get excited when it's tax time because you get money back. You get your money back, right? But I just want people to understand the reason you get a refund is because the government took too much money from you throughout the year. Like you overpaid the government. They took a bunch and they said, we're going to take more than what we deserve. And then we're going to hold on to it and we're going to give it back to you when you file your taxes. You didn't make any interest on that money. You didn't put it in any investment. It wasn't in your control. The government had it. They said, hey, you paid us an extra $3,000 last year that you really didn't need to. So here's your $3,000 back. We used to get excited about that. But now on the other side, we pay taxes. So we keep all of our money. So the government doesn't take our $3,000 in the year, and we can invest it and grow it and save it and do all the things we need to do with it. Then at the beginning of this year, we're like, this is how much we owe you, Uncle Sam. And normally, because tax laws are written for business owners, they're written for the people on 1099s and, right, doing schedules, W9s, doing Schedule Cs, right? Like when you're itemizing everything, like you can deduct more stuff. So I pay less back in taxes than, right, them taking it from you. So either way, how it comes in, you got to know which side do you want to be on. Do you want to be on the side that has favorable tax advantages on how it comes in? Or do you want to be on the side of no tax advantages, right, when you have a job? Right? So that's just how it comes in. Second part is how we spend it, right? There's taxes on everything. I just looked at our car lease. So the way they break it down is like rent payment and taxes. So it's a certain amount. It's five something for the rent part and $52 in taxes. And so just even on that, just every single time, there's tax on everything. There's tax on everything. Your our property tax is going up this year,
Yeah.
right? The car that we're leasing has tax on it. Your cell phone bill has tax on it.
Mhm.
Everything that you do, sales tax, food tax, like everywhere you go after the money comes in and then you go and spend the money, you got to pay taxes
More
on
taxes.
it. More taxes, right? So everything, this is why taxes are your largest lifetime expense. If you don't get a control over this thing,
It's a leak that you are just letting, money leak out if you're not keeping an eye on it and talking to the right people to make sure you are plugging up those leaks wherever you have opportunities to, and creating opportunities to be able to plug that leak up more is what's going to help people build more of their savings and keep more of their money, even from taxes. A lot of times, like, talk about keeping more of your money isn't just about budgeting and savings and habits and things like that. It's also about talking to the right people to help you keep more of your money away from taxes.
yeah, if you're even aware, right? We're happy to have this conversation with you right here, but like if you're even aware that taxes are a thing that you should be paying attention to, most people don't know that they can. I was just having this there's so many areas to talk about, but when I was in Nashville and I was having a conversation with a couple, and they're high income earners, and so they're in that retirement red zone. They're hitting they're in their like early 50s, and now they're trying to plan on like early mid 50s, trying to how to get out.
Mm-hmm.
And they both make money at their jobs,
Mm-hmm.
and they're like, we keep getting crushed in taxes. This is the number one talk for higher income earners at a job. Some of you want to climb the corporate ladder. You want to make 180 and 200 and 250 and $300,000 a year on a W-2. Well, now you're going to get crushed in taxes,
Right.
and you have no tax like deductions, no benefits, no way to like reduce it because all of your income comes in from the W-2. So what I told them is the actual solution is they need to start a business. They need to start a business or get rental income or like have something on the investment or business side, because that then lowers your taxable income and you can have some deductions.
Exactly.
And that's how you offset it. But a lot of times the higher income earners have been trained to just invest their way to the future, which gets to like the last part of what we talk about, the tax, right? Your tax when it comes in, tax when you spend it, but then you're taxed when you invest it. And most high income earners get sucked into I'm going to get into the tax deferred bucket, which means
or tax now, and do stocks and things like that.
Yeah, I mean, so 3 tax
Both.
buckets. Yeah, right. So three tax buckets. You're taxed now, you're taxed later, or tax deferred, and then you have tax advantage, right? Those are your tax buckets. So all of your investment dollars, all of your savings dollars, they're going to fall into one of those 3 buckets. Tax now, those are your savings accounts, CDs at the bank,
Mutual funds.
Mutual funds if like you're buying and selling in them, right?
Yeah.
Mutual funds on that side. Those are all taxed annually. So I have a statement downstairs came from our high yield savings account. They said we made $473 last year in our savings account. We have to claim that on our taxes this year. Like I have to write down like we got paid an extra $473, even though it was in the account. We got to write that down. That's a taxed annual account. When you put money into a CD, after your 12 months of your CD matures, you have to claim that on your taxes. They send you a 1099. There's no tax benefit to any of those. You are just paying taxes on the growth every single year. So then people get sucked into tax deferred. Tax deferred says, hey, I'm not going to pay taxes on this money right now. I choose to grow this money, push it down the line. When I'm ready to pull it out down the line, then I'll be taxed on it, right? And yeah, that's your 401ks, IRAs, Roth, 401ks, IRAs, 403bs, 457 plans, TSPs, deferred compensations, like anything that you have over there. That's actually that's one of the things that is tax deferred. So again, why do people put money in tax deferred? Because they say, hey, I'm gonna lower my taxable income right now. But down the line,
you're basically kicking your taxes down the line.
Yeah.
I'll deal with it later. I'll deal with it in retirement. I'll pay it later. But taxes are not going down later. They're actually
Yeah.
going up later. So what you would pay now would be less than what you would be paying later in taxes.
What they sold you on was that you would be in a lower tax bracket
later.
But that means.
But is that ideal? Right? Like you want your income to shrink as you age? Like that's not ideal either. That's ideal for the conditioning and what they've taught people, but that's not really ideal for your income to shrink because supposedly your expenses should also shrink. You should be out of your mortgage. You should be downsizing. Your kids are out of the house. You have less expenses. Things are paid off. But ideally, we want our income and our lifestyle to grow over time and not shrink. We want to be able to take vacations and travel and have a legacy house that fits the entire family and the grandkids and everybody can come visit. And we don't want to have to shrink ourselves in order to pay less in taxes, as if taxes is like what our life is dictated on, right? Just running away from taxes and trying to shrink ourselves to that. It should be, growing ourselves and figuring out how to avoid taxes properly throughout that time instead of just running away and kicking them down the line.
So
it's not working.
There's always, right, like when you, if that is you and you want to make less income in the future, then that might be right. Again, if you make $600,000 a year, this is who tax deferred products are meant for. You make household $600,000 a year. Yeah, when you're 70, you probably won't. You might not. If you're just working at a job, right? If you're a surgeon or something, you're going to probably stop at a certain point, right? You're going to stop working that way. And yeah, you probably will make less. That's who they might be meant for. That's who those products are meant for. But your average person puts away $100, $200, $300, somewhere between $100 to $500 a month. The average person puts away into their tax deferred product, right? Their retirement product. And so if you just take the high end of that, 500 times 12, that's $6,000 a year. So if you make $87,000 a year and you put away $6,000, it's going to look like you only made $81,000 that year. Fine. The question is, how much do you plan on making when you're 70? Like, you're going to go from 87 down to 40? Like, is that the life you want to live? Or are you trying to stay at 87? Because if you stay at 87 or more, your taxes don't go down. You've just now deferred them. Now your taxes probably go up. Now more of that retirement money is sitting in a place where, you're not going to be able to really maximize it in the way that you want to. Mm-hmm. Hey, Aaron, good to see you, man. Glad you're here. We're having a conversation around taxes, ladies and gentlemen. Taxes are your largest lifetime expense. You get taxed when you make the money. You get taxed when you spend the money. You get taxed when you save and invest the money. Mm-hmm. So some of you right now are getting excited because you're getting your tax refund, you're getting your tax return, and you're going to be able to kind of go do some things with it. By the way, maybe we should talk about what to do with your tax return. I feel like we did
that for the next one.
Yeah, I guess we'll do that next Monday.
Right.
We'll be just getting back from Connecticut.
You're happy.
But yeah, we'll. You can't. I can't. I don't know how to operate in this situation. I don't know what to do. What do I do? What do I do? Anyways, taxes are your largest lifetime expense.
Taxes. Taxes. Right, Leia?
Anyways. So we got to have strategy.
We definitely should talk about that next week.
Well, I mean,
don't go blow your tax dollars on sales.
What to
do with it?
Ash, clip this up. clip this up. Next week we're going to be talking about what to do with your tax return, your tax refund, what not to do with it, what to do with it.
Yes.
We'll talk about that all next week. Clip this up and let's make that a promo so we get it out there.
Hints, emergency funds.
There's lots of things. Don't give it away.
So many things.
Don't give it away yes, there's a bunch of things. Either way, on this side today, talking about taxes, understand that taxes are your largest lifetime expense. How it comes in is its whole conversation. You got to figure out how to have tax advantages. How you spend it, you got to be mindful of where you're spending it on the tax side, and then the side of saving and investing it. Understanding your tax buckets. You're either tax now, you're tax deferred or you're tax advantaged. Tax deferred, kick the can down the road. Tax advantage, Roth IRAs, cash value life insurance, municipal bonds, right? Those are the only three kind of that you're going to invest in at your age and stage probably is going to be either a Roth product, Roth IRA, Roth 401k, something on the Roth side, because that, again, has you pay your taxes now, but then down the line, you don't have to worry about the taxes after that money grows. Or you're looking at cash value life insurance, some form of IUL, whole life, whatever you like out there. But they do the exact same thing. You pay your taxes now, down the line, no taxes on the loan on those on that money. And or you can look at, if you still believe in our government or your local government, municipal bonds. Municipal bonds are actually a tax-free, tax advantage product. So you take your money, you go loan it to your municipality, right? You go loan it to your state or whatever the thing is.
All right.
I'm done. Taxes, largest lifetime expense.
That's right. This will be Chris for Money Monday.
Yes.
Chris turned white.
Yes.
White and extra hairy.
Yeah. Here.
Larry's like, don't call me Chris.
I'm Chris. I'm Chris with the crazy hair.
All right, for real. Babe, let's just say bye. Let's say bye.
Yeah.
Daddy-o.
Daddy, yo! Oh, okay. I think.
All right, taxes. Very true. That's what we're talking about. That's what we talked about today. But for real, taxes is your largest lifetime expense. So if that is true, that would be where to focus most. A lot of times people focus on like, how can I earn more interest? Where can I invest my money into? And blah, blah, blah. And they're not even thinking of taxes and how they can, grow more advantages and wherever they're investing with taxes. So we will see you guys next week. Babe, you sure you don't want to say bye? He's done. All right. Happy. Money.
Monday.
With the Mouzons. And Leia down there. See you guys next week.
I have something to say.
And if you guys want to learn more about what to do with your money next week, your tax refunds next week, make sure you plug in next week, Monday, 11 a.m. Eastern Standard Time. Money Mondays with the Mouzons. What do you want to say, baby?
Okay.
These book reads?
No.
Let's try again. Let's try your marketing skills one more time. These book reads.
So, these book reads.
These book reads. Clear. Go ahead. These book reads. Go ahead.
These book reads is about reading books in the summer.
Not just in the summer. All year round.
Yeah, mostly, but in the summer.
No, all year round.
No, mostly in the summer.
Why?
It's because a lot of kids don't really read in the summer, but most kids just do all their schoolwork because summer break and stuff.
I don't know. I think still makes time. Still good time to read, but that's true. People don't read as much, maybe because they're doing more outdoorsy stuff. Maybe.
Yeah.
I don't know, but you could bring a book to the pool. Right?
I tried that once, but I got distracted.
Too much distraction. Yeah, we have to increase our level of focus with distractions. But Z's Book Reads, make sure you guys go subscribe on TikTok for us so you can like and follow and get some more book ideas for your kiddos, for your nieces, nephews, cousins, more book ideas for kids. And
every person that is below 18.
Mm-hmm. Yes. And it's a great for authors. Remember we tried to remind them of this last time and you didn't remember. Do you remember this time?
It's a great advertisement.
Yes, good way for new authors to advertise their books, market their books, through Z's Book Reads. So any authors out there who want to market, advertise their children's books, we would be happy to read them and market them for you guys on Z's Book Reads TikTok channel. All right. And we will see you guys next week.
Bye.
Baby shark.
Yeah.
All right. Happy Money
I think
Mondays
he's
with the
unconscious.
Mouzons. Bye. How do I
Bye.
do this end stream?
And
Bye.
bye.